came a long way from the U.S. He's leading one of the largest DAT projects in the U.S. He came from a very traditional background. Actually, he kind of retired from BlackRock and then joined Web3. Joe, could you say hello to the audience?
Hi, everyone. Good afternoon. And I'm really, really happy to be here. This is my third time in Hong Kong since last fall. And the level of energy here is incredible. I'm the CEO of SharpLink. SharpLink is the second largest corporate holder of Ethereum, of the Ether token. We were founded last June to essentially be the first digital asset treasury outside of Bitcoin. And we're modeled initially on the strategy that Michael Saylor of MicroStrategy enlisted. And I joined SharpLink after a 20-year career at BlackRock, the world's largest asset manager.
Thanks, Joe. We all seen the clear shift where companies simply shifting from allocating to crypto to actually building around it as a core strategy. Yeah. As you introduced, you have very successful and a long-term career at the traditional finance, BlackRock, for more than 20 years. Can we start by telling your story, why you joined the Web3 space and why now you think it's the right time?
Sure. My 20 years at BlackRock, again, the world's largest asset manager, the first 12 years were helping scale one of the largest financial technology platforms in traditional finance. But I actually joined Web3 about 6 years ago when I started leading a team looking after blockchain and digital assets for BlackRock. And in the last 3 years, from 2021 to 2024, we became the largest crypto manager in the world. We launched the first US ETFs on Bitcoin and Ethereum, and we launched the largest tokenization fund in history. We did it not for ourselves. We did it because there was massive demand for exposure to Bitcoin and ETH and yield on chain. And the products together at their height raised about $100 billion US dollars, not because of what we did, but because there was massive consumer and institutional demand.
Thanks. I want to follow up by asking that you joined Web3, you joined a data company. Why SharpLink? What is the story behind you and the other Joe?
Yeah, so there are two Joes. Both of us are bold. Bold and bald. Joe Lubin, my chairman, is one of the co-founders of Ethereum. He built a company called Consensus going back about 10 years ago after Vitalik wrote the Ethereum white paper and Ethereum was launched. He built the most successful go-to-market commercial business in the Ethereum space. So while the Ethereum Foundation was developing the protocol and telling the story about decentralization and trust and security, Joe Lubin was building the actual businesses, the wallets, and the developer tools. We had met a little over a year ago, and when I was retiring for BlackRock, he had the idea of launching the first Ethereum digital asset treasury to give people, through a public company equity, exposure to the Ethereum opportunity. And I jumped at that opportunity to lead it because I deeply believe that Ethereum will end up becoming the future world computer, and in the shorter term, the future ledger for most financial transactions in capital markets and the new agentic economy.
Back to your earlier sharing, you initiated a part of the ETF launched by BlackRock.
Yeah.
From an institutional background, for investors to allocate in the crypto or Web3 space, it's very easy and natural choice.
Yep.
It's Bitcoin. And when you join a SharpLink, why SharpLink or you and your team choose Ethereum instead of Bitcoin?
Sure. When I got into this space in about 2018, most financial institutions did not understand what Bitcoin was. They certainly didn't understand what Ether or Ethereum was. So we spent several years educating them and explaining that Bitcoin is digital gold. You hold a small amount in your portfolio and you have potential outsized returns in a way that's less correlated. Ethereum was a little bit harder to explain, but once institutions got it, they got it. Meaning, if you believe we're at the early days of internet adoption or e-commerce adoption, you would want to own those stocks. You'd want to own Amazon. You'd want to own NVIDIA. The idea is that Ethereum will end up powering many, many trillions of financial transactions. Therefore, you want to be part of that adoption curve, just like the early days of the internet. So I don't think it's a question of Bitcoin versus Ethereum. I own both. I recommend people own both in their portfolio. The difference is that Ethereum is a natively productive asset. Yeah. What do I mean by that? You can own Bitcoin and you keep it in your portfolio and you hope it appreciates over time. Ethereum actually has an opportunity to stake it, to secure transactions in the ecosystem and generate yield, almost 3% yield, just by taking your ETH and staking it. So I would say it's a much more productive asset. And Ethereum as a network is massively programmable, whereas Bitcoin is very strong at holding and moving Bitcoin.
Yeah, we all agree that Ethereum is the fundamental layer. It's part of the fundamental layer of the new financial infrastructure. But for Ethereum to achieve that vision, what needs to be true so we'll get there?
Sure. If you think about what is being built on Ethereum, it's centralized exchanges, decentralized exchanges, an ability to swap any asset for any asset, an ability to borrow any token and lend it or earn yield. So it's highly programmable. You can put art in the form of NFTs. So if you can program something, you can build it on the blockchain. But the three first use cases that Ethereum is dominating are stablecoins, tokenized assets, and decentralized finance. And you can think of stablecoins as just being a digital version of a dollar, or more recently, here in Hong Kong, with the 2 new licenses granted, a digital version of a Hong Kong dollar that can be used to transact 24/7 in an instant. So the future of all value and movement will start with stablecoins. Over 60% is happening on Ethereum. The second is this idea, which is very early, of tokenizing all assets. If you hear Larry Fink, the CEO of the world's largest asset manager, he's very clear. Stocks, bonds, funds, real estate, commodities, you name it, will exist in a tokenized form on chain, not because it's fun new technology, but because it has advantages. It can be traded 24/7. You can program it, and it moves and settles in an instant, not in 1, 2, or 3 days. And when you have stable coins and tokenized assets, you can participate in decentralized finance in ways that you can't in traditional finance. We're very early, but the tokenization of real-world assets is the next financial revolution alongside AI.
Thanks. I want to shift the conversation a little bit towards something more fundamental.
Yep.
What SharpLink actually is as a company.
Sure.
Can you elaborate a little bit on that?
Sure. So SharpLink is a digital asset treasury, or a DAT. You'll hear that word used. And we really have a very simple but exciting mission. We are listed on the US NASDAQ exchange. We started this new strategy last June, and we were able to raise several $billion of new capital directly from US and global investors, both retail and financial institutions. And we took those dollars that we raised and we bought Ether tokens. And the reason is Ether is the trust token that's going to power the future of Ethereum. And if you own our stock, we're giving you an ability to get the capital appreciation of the Ether token And then we do all the hard work to make the token productive by staking and using it in the DeFi ecosystem. And it's a much simpler way than an investor trying to buy the Ether token themselves or trying to buy it through an exchange-traded product.
There is always some argument saying that data companies are still a balance sheet story. What do you say about that?
You know what? I think in the Bitcoin space, there are about 100 digital asset treasuries. And because Bitcoin is not natively productive, there's no yield, the leaders of DATs have to use financial engineering. They issue convertible bonds, they issue preferred stock, they leverage up their public equity to try to create yield and outperformance. In the Ethereum space, you don't need that leverage because it's natively productive.
Now I want to shift a little bit towards the competitive landscape.
Yep.
When investors look at opportunities in the DAT space, they have a few options. Probably they start with Bitcoin's MicroStrategy, and then there is others like BitMine, and we also have SharpLink.
Yep.
How, as an investor, how do we differentiate the three of them, and what would be SharpLink's advantages or?
Sure. So if you want to own Bitcoin, it's very simple. You can buy MicroStrategy or you can buy the ETF and you just hold it. It doesn't do anything. And you hope that it appreciates. And over a long period of time, we've seen massive accumulation and appreciation. In the Ethereum space, there's three ways to hold it. You can try to own the spot token yourself. Most institutions can't do that. And there are a handful of digital asset treasuries. But like you said, there's only two of us who've raised billions of dollars of scale. It's my friend and colleague Tom Lee at BitMine, and there's SharpLink. We are the only one. We respect Tom. We respect BitMine. He's been an amazing spokesman for Ethereum. We want more and more people to be buying Ether. That's good. We've just been doing it differently. From day one, we took our Ether and we made it productive. And the interesting thing about the digital asset treasury is we have actually something that no one in crypto has. We have something called permanent capital. We're not a fund. We're not a short-term hedge fund. We can hold this capital for decades, which means we can allocate our Ether into the Ethereum ecosystem, and we can do it and lock our capital up for a year or 2 years. And if you do that in crypto, you're able to get better returns. So instead of just getting the standard 2.7% Ethereum staking rate, we're able to fund other protocols, lock our Ether up, and get rewards in Ethereum well beyond what you can get as a retail investor and well beyond what you can get as an ETF. And we've done it not through third parties. We've done it by building the most institutional team because we feel it's respectful to investors to try to keep our costs low, so as much of that yield, as much of that return gets put back into the pockets of our investors. And we've accumulated about 770,000 ETH tokens, and we've received about 17,000 ETH tokens as rewards. And the price of Ether is about $2,300. So we've earned for our investors over $35 million of rewards just by making it productive.
You mentioned that with the capital, you're also supporting other use cases or projects that may be helpful to the ecosystem.
Sure.
Can you also elaborate a bit on that? What types of projects may get support from you?
Sure. So in addition to just taking our ETH and staking it to earn the very simple, almost risk-free 2.7% reward, our partnership with Consensus and with Joe Lubin has given us access to dozens and dozens of the most sophisticated DeFi protocols. And we've all been watching the news that there's been hacks in DeFi, there's been losses in DeFi. But if you have an institutional team, you can do the due diligence. We've looked at dozens and dozens of projects, and we help fund by staking our ETH with them the most sophisticated, but also the most institutional of these protocols. And in return, we get excess rewards. But it requires a sophisticated team. It requires due diligence. It requires risk management, because we are the stewards of billions of dollars of capital on behalf of our investors. So we've been very, very fortunate to do this on team by hiring a group of exceptionally talented leaders.
I asked this question because I saw a lot of entrepreneurs here. They're trying to build an ecosystem.
Yeah.
If there is more opportunities to work together with members from both, they're from the community here in Asia and the community from West. I know you travel a lot to multiple regions. How do you compare the dynamics here to what you see in the US? I know there was a digital asset summit in US that was said to be very institutional. How do you compare what do you see here and what's happening in the US?
So I'll be very, very direct. Under the previous US administration, we had a hostile regulator. They were not interested in helping promote innovation in digital asset space. It took us years to get approval for the ETF. I think the new administration is entirely different. Within months, they passed the Genius Act. The Genius Act allows for the issuance of stablecoins. We've seen significant growth in stablecoins in US dollars, over $300 billion. But I've been traveling through Asia, and I do think there's a local strategic competition happening in the region, and I'll speak very openly about it. You see leaders in Tokyo, in Singapore, in Hong Kong, and also in Seoul, South Korea, wanting to be that local digital hub for crypto finance and for the new digital economy that's being built in Asia. Each of these countries is going at a slightly different pace. We were incredibly happy to see the Hong Kong government issue the first 2 stablecoin licenses. We believe and hope it'll be the first of many. But I do believe very strongly you're starting to see US institutions not experiment, not do proof of concepts. They're making major business model changes. The New York Stock Exchange is going to start trading public equities 24/7. NASDAQ is going to trade public equities 24/7. And you're going to start seeing much, much more participation from banks, asset managers, and custodians. And I do think many governments and regulators are watching the news around the next legislation in the US, the Clarity Act. But I think it'll end up going from regulators fearing innovation to fearing not innovating. And I'll tell you something that's really important. There's a reason why this is my 3rd trip to Hong Kong in 5 months. We're opening up an Ethereum digital hub in West Kowloon tomorrow. Vitalik Buterin, the founder of Ethereum, will be there because this should be a center of innovation that will change the future of Hong Kong finance. We have the highest density of family office and capital money in the region. You have the highest density of tech talent, and you're geographically located in an area where this island should be winning. It has the license to win. It has the ingredients to win. We just need to win. And so I'm really, really pleased. People look back sometimes at physical locations and think they're just an office or a building. But if you go to Palo Alto, California, you will see where the microchip was built in a garage. You will see where 2 men named Steve from Apple built the future of consumer phones. This Ethereum hub can be more than just a physical location. It can be an incubator for the future of innovation for the island and the people of Hong Kong, much more than just a physical co-working space.
Thanks for promoting Hong Kong. We know that for audience here, we all understand the benefits this new technology can bring. We all see the trend of capital going on-chain. All applications are happening on-chain. But standing from a more traditional asset investor or allocator perspective, there are still hurdles for them to get in. I'm sure you met enough of them
Yep.
who are still doubting either the value of this asset or this industry, or they have no confidence in the future of it.
Yep.
What do you see are the major barriers for the institutions to get in so we can achieve scalable application or scalable deployment into this
Yep.
asset class?
I think there's three barriers. The first is the user experience dealing with many wallets is not easy for a traditional investor. You normally have a brokerage account, you have an advisor, you go online. It's very easy to buy or sell funds and securities. Wallet infrastructure is getting better, but it's not the same, is number one. Two is education. People are confusing crypto projects with digital asset transformation that will revolutionize finance. So there's Bitcoin and ETH and Solana and a very long tail of tokens. Many of those tokens are frankly just great speculative assets. That's not what we're focused on. And I would say the third thing is making sure people understand the benefits. Like, why is it better to own a stock or a fund in a token format with a bank or a custodian than owning it in the traditional format? It's very simple. If you own a fund, it takes 2 to 3 days to trade and get your assets, whether you're buying or selling. If you're a financial institution, if your counterparty disappears overnight, you're left holding the bag and the risk. But more importantly, if there's a bad weekend, a very volatile weekend, a war with Iran, a crisis in the precious metals market where we saw gold and silver trade in a very volatile way, if you own this asset in digital format and it's happening on a weekend, you can buy or sell. If you're holding it in a traditional format, you're watching others take advantage of the situation, and it's Monday morning, you've already lost the market movement. The second thing I would say is very not understood by retail investors. Most of the largest institutions in the world, if they manage a fund of stocks, if they own Tesla, they're not just holding it. They're lending that Tesla stock or Nvidia stock or Google stock to people who want to borrow it, and it generates a return in addition to owning the stock. It turns out that retail investors can't do that if they own Tesla or Nvidia or Google. But if you own it in a digital format with a bank or a custodian or on-chain, your wallet can lend your assets and you can get additional yield. So some of the tools that traditional infrastructure and financial institutions have been using for generations will suddenly be available for the little guy who can take advantage of them. So imagine a world where there's a bad volatile movement in the markets over the weekend and you can move your assets just like the institutions. And in the good days, you can lend your assets just like the institutions do. This is the promise of tokenization. We just need to fix the user experience. People shouldn't know they're operating on a blockchain.
That's one good suggestion. Also, if an asset manager from the Web3 or crypto space, if they want to pitch an institutional investors, what would be your suggestion to them, aside from user experience? If I manage a digital fund and I'm pitching an institution, what would be your top 2 suggestions for us to win the pitch?
So I think there's 2 elements that are different in the digitized asset space. One is because everything is done on chain, you can actually lower the cost of doing due diligence, you can lower the cost of distribution, and you can even lower the entry cost of owning a fund. So for example, take real estate or art or even a private equity fund. Very often there's a very high cost to enter that fund for an investor because it's done through paper and a lot of human due diligence, and you're using a lot of Web 1 and Web 2 inefficient technologies. But if it's on chain, you could take that piece of real estate and you can fractionalize it. You can make it smaller and let more and more people buy it. The second thing is, when you're ready to sell it, there's potentially a lot more liquidity. You can take any asset, trade it with any asset on chain, and you can see where the liquidity is. So it can democratize investment, it can lower the cost of distribution, and in the future, it's not yet available, things that are illiquid should eventually have more liquidity so that you can trade it more often.
Thanks. Now let's shift it to the reality now.
Okay.
The market is...
He's saying that I'm a dreamer, and I am a futurist because I think it's hard to stop the progress of technology. It just may take longer than we expect.
Yeah, I say that because I admire your vision and admire your contribution to how you help bring this asset class into the mainstream.
Thank you.
I say that because now the market is still not looking very good. When you hold a large amount of assets, crypto assets in particular, it's inevitable. You have to manage the drawdown. You have to manage different market situations. We'd like to hear your thoughts on how SharpLink manages when the market is not doing very well.
Sure. He's being very polite. So in my 8 years in crypto, I've seen 5 or 6 periods where you see massive appreciation in Bitcoin, Ether, Solana, and then inevitably there'll be a drawdown. But in each and every one of those periods, it was followed by a higher high, where the high quality projects survive and the lower quality projects don't. And each time that you have a downturn, there's a recognition that we need to raise the standards in the industry. Security, disclosure, regulation. And so the beautiful thing about running a digital asset treasury is when the price of Ether goes up, my stock goes up. And I can make my stock productive in staking in a good cycle. And when the price of Ether comes down like it has since last October, my stock price goes down, but I can still make the ETH productive. And given that we don't have debt or leverage, we just continue managing through the cycle and doing it the right way. But I said something about regulation, and I'm not here to plug Hashkey, but when we built partners at BlackRock, when we build partnerships at SharpLink, we do look for those sophisticated and regulated partners. So we've been spending time with Hashkey. You have licenses in all the right locations. You're building an incredible exchange, an asset manager, a broker-dealer, a staking provider. This is going to be the future of vertical integration for the financial revolution I'm talking about. But a lot of it is doing the right things, treating your investors well, whether the markets are up or down. It doesn't matter. In the long run, we're giving people exposure to that long-term opportunity. You need to be able to weather good markets and bad.
Thanks, Joe. We have the same admiration for SharpLink and what you have been building. Yeah. Probably I have to ask a more uncomfortable question.
Yep.
What keeps you up at night recently?
2 things keep me up at night these days. One is, for a long time, the crypto community, the assets didn't trade as risk-on assets. What do I mean by that? For a long time, Bitcoin and Ether were pretty uncorrelated from the big public stocks. And I would tell you in the last year and a half, Bitcoin, Ether, Solana have been much more correlated with the big tech stocks. Yeah. And so it's hard to explain to investors how they're not just getting, NASDAQ or Hang Seng tech exposure. So in the long run, we think it'll be trading in a less correlated way. But right now, it's very correlated to risk-on tech assets. And in a world where you have a lot of geopolitical uncertainty, it creates a lot of uncertainty, not just for tech companies, but for crypto as well. The second thing is just simply standards and security. So I told you there's a lot of builders in this community, some of the most innovative, forward, futuristic looking people, but people need to build with security as the first priority. And the crypto community hasn't always done that. And so that's why we've hired an incredibly institutional team who knows how to do diligence, who takes the time. We're not looking for the fast dollar. We're looking to do it the right way. In some ways, we are protecting the king's gold. So you really need to be careful. So what keeps me up at night is geopolitical risk and security in the ecosystem. The regulation will go faster and slower in different jurisdictions, but over time, there'll be a real pressure for regulators to support this innovation.
Institutions are very sensitive to regulatory changes and geopolitics. Given the current global geopolitical landscape, how we convince institutions to continue their path on bringing crypto or digital assets into the mainstream?
Yeah.
We'd love to hear your thoughts.
In the US, it's already happened.
Okay.
For years, the regulators wouldn't let them participate. Now they're in a race to not miss the opportunity. Again, I think Asia is much more advanced right now than Europe, but we are watching who's going to be the front runner, who's going to be the leader in providing clear regulation. Is it going to be Tokyo? Is it going to be Hong Kong? Is it going to be Singapore? Or is it going to be Seoul? And I believe it'll end up becoming a bit of a geopolitical race. But there's one more item I want to talk about. The most successful thing in crypto is stablecoins. This idea of having a digital currency that can trade 24/7. It's growing rapidly. But what people don't talk about is today over 95% is US dollar denominated. And if stablecoins are going to be the means of payment, not just peer-to-peer, not just cross-border, not just for 24/7 tokenized assets, stablecoins are going to become the payment rails for trillions of transactions in the agent economy. If I'm a local Asia regulator or legislator, I don't want it to be US dollar denominated. I want to make sure we have local denominated stablecoins to handle treasury movements and local economic agentic payments that are coming at a level of scale like you've never seen before. I don't want it to be dominated, if I'm local, by US treasuries and US stablecoins. So I think it's going to create a real geopolitical competition to advance this legislation, not to resist it.
Sure. Hong Kong regulator has granted two licenses to the market players. There will be a Hong Kong dollar stablecoin. We have great expectations for that.
Yeah.
Back to our treasury strategies. If you compare the challenge now to like 2 or 3 years ago, when you try to launch the ETF project,
Yeah.
how hard it is now compared to the ETF time?
I think when we launched the ETFs at BlackRock, and again, what they are is these daily tradable, exchange-traded funds. We launched with 11 other issuers the same day on January 11th, 2004 for Bitcoin, June 24th, 2024 for ETH. It felt like there was competition, but most of the big institutions weren't participating, so we were kind of a leader. Today, at least in the US, every financial institution, insurance companies, pension plans, banks, exchanges are building teams. So there's a war for talent, a war for partnerships. So I think on the one hand, the competition has just gotten stronger and higher. And I think in crypto or in the digital asset space, you'll end up seeing a handful of really important leaders and winners. And you'll see people who are going to be left behind. But we're really proud when we did it at BlackRock, how we're doing it at SharpLink. We're doing it by raising standards. And I think institutions here in Hong Kong should be respectful of their regulator, should work with their regulators. It's a mutual education. And it's not about lowering standards, it's about raising standards to really create a bigger capital markets. And the last thing I'll say on this topic is, people think this is just moving from traditional finance to digital assets, from one type of institution to another, from analog to digital. What they're missing is it's going to expand capital markets and prosperity in a way that we can't imagine today. We always underestimate progress. Bill Gates, the leader and founder of Microsoft, has a great quote. Humans overestimate what a small team or individuals or technology are going to do in 1 year. We overestimate it, but we fundamentally underestimate how technology is going to change our lives over a 10-year period. Just look at how AI and agentic agents have changed everyone's lives, society, and the efficiency we're seeing. No one could have anticipated it 2 years ago, and I think we're vastly underestimated the impact on all our lives, how we transact, how we accumulate wealth, and how financial institutions are going to transact. I may be too bullish in the short run, but I'm probably not optimistic enough in the long run.
Let's look into the long term. In 3 to 5 years, what will be the landscape, the industry landscape like?
I think most people will have a new type of wallet. It'll be digital. You won't even think of it as crypto. By the way, there's about 500 million to 800 million wallets in the world, with a disproportionate number here in Asia. I think most people, their brokerage account is going to be an on-chain wallet. Their bank account will have an on-chain component, and most people will have some sort of digital twin of their wallet, an agent who they train and trust, who will be able to do very simple things for them. Their paycheck comes, the agent will take it and put it in a bank to get interest. Your paycheck comes, your bonus comes at the end of the year, they'll invest it in the market exactly to your preferences. The markets will move over a quarter. Your agent will rebalance it without even asking you. And the beautiful thing about agents is they don't sleep. If you train them well, they don't make mistakes, and their economic incentives are aligned with yours. So 3 to 5 years from now, just like you order food on your phone and it arrives, you watch a movie instantly, you pay your friend instantly, the agentic machine economy will just be part of everyone's lives, in your financial life, the way it is in your consumer life today, and you won't even know you're working on a blockchain. And we believe strongly the majority of that is going to happen on the most secure and trusted chain, which is Ethereum, and it's going to change our lives for the better.
Thanks. Before I let you go, I have 2 more quick questions. One is about the market. There is this 4-year cycle saying, where are we now? Are we at the bottom, consolidating, or one last drawdown? Where are we now in the market cycle?
I think since October, we've seen a very significant drawdown in the price of Bitcoin, Ether, Solana. I think I'm not going to tell you what the price is. Do you know why?
I'm not going to ask.
I don't know in the short term, but I know in the long term it's a great asset to hold. And I think at this moment, the risk reward is as good as it's been in a very long time.
Sure. Last one. What is the biggest misconception people still have about the DAT space?
I think they think it's a passive investment. I invest in this public company strategy for Bitcoin, SharpLink, or BitMine, and I'm actually doing a very passive investment. It's an active choice. You're getting exposure to an asset, in our case Ether, that's highly volatile, that has a great opportunity for capital appreciation. That is not a passive decision. And then what we do as an institutional team is not passive. We take that asset, we stake it, and we bring liquidity into the Ethereum ecosystem. That's what I call active management. And it is a volatile asset, but most assets that are in the early stages of technology innovation have that volatility. It's a feature for capital appreciation, not a defect. So don't think as a digital asset treasury as a passive investment. Think of it as getting exposure to a long-term capital opportunity.
Thank you so much, Joe. This has been really insightful conversation. Thank you very much, the audience, for joining us.
Thank you, everyone. Good afternoon.
Thank you, DC and Joseph, for the amazing sharing. Gentlemen, please remain on stage for a photo together. All right, let's do a thumbs up and look towards the middle at our official photographer. 1, 2, 3. Big smile. And another one. Thank you. A big round of applause for DC and Joseph again. Thank you so much for sharing your expertise and experiences with us. Thank you. I'm sure we all have some great takeaways from this session, and we all get very inspired.